Hi traders, hope you are well this morning. Just thought I'd do a quick video just before I go out and play golf on this beautiful sunny day here in Stratford-upon-Avon. Before we go into the markets, I just want to list a couple of things before we go into how to trade non-farm payroll. It's happening this afternoon at 1:30 UK time, so look out for that. I used to trade this 30 years ago and made a lot of money. Lost a lot of money, so it's really important to understand what to do and more importantly what not to do in the next few hours. So the first thing I want to go into the markets is we're going to look at position trading, the analysis from the advanced pro charts, what is a strong buy and understanding the momentum behind it, and then swing highs, swing lows for better and more consistent entries. We then go on to day trading using the advanced pro charts, using the long-term charts to get entries and then aligning with the best order blocks. This is really, really important for your long-term success. And then we'll go on to how to trade non-farm payroll. So let's go into the advanced pro charts. Some of you will know this, some of you have the advanced pro charts, and if you do, fantastic. Thanks for making that commitment to your long-term success. So I'm going to dive into the 4-hour chart, which is the medium term, which I look at most days during the daily video analysis. I do two analysis. I do the early morning briefing, and then I do a daily video analysis New York session, which uses the 4-hour chart. Just to explain for people who are new to my YouTube channel, if you are, then please subscribe. I'll keep you updated to what's going on in the VIP room as well. And if you're interested in becoming a member, then click on the link below and we'll get you started. So let me dive into the 4-hour chart first, and then we go on to intraday setups before we go on to the non-farm payroll setup. This is a 4-hour chart now designed specifically for everyone to use. Okay, it's not... You don't have to be a rocket scientist to understand that when it's red it sells, when it's green it buys. That is it. Okay, it's designed for beginners, even though it says advanced pro charts. The key to it is to understand where the momentum is, and we use a histogram here. The red histogram indicates onward, downward momentum. This is gold. And we also have a stochastic here, which gives us the swing highs and swing lows. So we're going to talk about momentum, and we're going to talk about break of structure, and we're going to talk about swing highs and swing lows. And I'll give you a couple of examples. This obviously is gold and selling, although we've got non-farm payroll, so we won't be entering anything this morning. So what we have here, we have a red background which indicates onward, downward momentum, and we also have buy and sell signals ultimately driven onto your charts. Now you don't have to be advanced pro trader to understand this. This is very simple, and beginners, this is ideal. Now as you progress, you might want to take some of these off. So for instance, you can see this order block here, so you can actually trade into the order block. The order blocks are the areas to where the institutions are selling off, as the name suggests, or are lining up to sell, and it goes green whenever we get a buy. And I'll show you that in a minute. So what is a legitimate momentum trade? So let me show you one where it is not. Here, for instance, we could say that this momentum is going to the upside into the order block. So the chances of actually moving down at this moment are quite small. But let's have a look at this one here. You can see that this histogram is down. This is 4 hours, so it's very slow. So this sell becomes momentum at this point, 2 o'clock in the afternoon, where it falls 1957 down to 1930, so 270 pips. Here's another one here. So a legitimate sell signal automatically driven onto your chart below the 50-day moving average, which is a common theme that we use here at the Trading Mentors. And of course there's a big move there. 1953 goes down to 1914. hundreds of pips in that move. So the momentum is the key. So once you've got momentum, then the price drives down and is confirmed by the red color. So hopefully that's helpful in terms of the 4-hour chart. So the swing highs are what you're looking for. You don't want to be selling here in this area, because at some stage it is going to bounce. Okay, so at the point of entry, you want to make sure you've got a swing high and then wait for the stochastic to come from overbought. And if you notice here, the angle and the direction of the stochastic is telling you where the price is going. And a similar situation here, this is actually a better trade, although it didn't move as much. See the sell signal here on a swing high, momentum is to the downside, and so therefore the price moves down. Now if you're a position trader, this is fantastic. This is exactly what you're looking for. So you look at this and then of course it goes down. Now the exit is slightly tricky. Exits to take profits has always been subjective, and that's a personal thing. For me, on a position trade, I might think about taking the profits out here. Okay, or I use a trailing stop on a lower time frame, and I'll show you that now. Sorry about that, I was just checking my phone there. I thought I'd stop the recording. Okay, so here's the chart, 4-hour chart on the left and the 30-minute on the right. Now the 30-minute I tend to use for intraday during the early morning briefing. If you're not signed up to that, it's free, so just click on the link below. I'm just going to enlarge the 30-minute chart so that we can actually see the momentum of the trades and the break of structure, which is exactly what we're looking for in terms of the same direction in the 4-hour chart. So once you've got the 4-hour chart, you can actually decide to position trade it and then hold it for a few weeks, or you can decide to be a day trader, or both. A mixture of both is fine, as long as you're going in the right direction, of course. A couple of things here on the 30-minute chart. A few things. First of all, red background. We have to have a red background in order to confirm that we have the break of structure to the downside. This is gold again. I'll show you an upward momentum on another trade that we had in the last couple of days, pound Canadian, and show you how that works in terms of order blocks as well. So stick with me. Don't wind it forward. I know you want to wind it forward. We have several things on here. We have the 50, the 100 and the 200. In my blogs I often mention the 21-day moving average and the 50, so it just depends what time frame I'm on, but I do like the 50, the 100 and the 200. It works really well with those three moving averages. So as we can see, everything red in terms of gold. I think my screen keeps freezing, so I apologize for that. So as we can see, now the thing is that's important for intraday trading, we have a central pivot. The central pivot acts like a stepping stone to the downside in this instance, of course. So step 1, step 2, step 3, step 4. So you notice how it's going. This is going down, and going down. And this takes the average for the previous day. So as long as the price continues below that central pivot for intraday trading only, then of course it is going to continue. When I post the early morning briefing, I will give you targets. So one here, for instance, on that day, whatever day it was, doesn't matter. So the targets I will give you is S1 and S2, support 1. Now support 1's a very high probability of being hit, almost 90%, and then S2 has a very high probability of being hit, but might not hit on the same day. You may have to hold that position for a few days. So that's intraday trading. And if you want to set up your charts exactly like this, then please contact me. So on to an upward momentum trade here, which we had in the last few days, the pound Canadian. And the first thing that's interesting, as you may see here, is the order block. The order block is really important because they automatically, on your charts, they tell you where the buy zone is, and they tell you where the sell zone is. Okay, so it doesn't get much simpler than this really. But when you first start and you're using the advanced pro charts, you want to ensure that you have momentum behind the trade before you get in. Now I think it's fair to say that during this time, as it hits the bottom of this buy zone, double bottom by the way, buy zone, there's no momentum behind the trade. Okay, so when you first start with the advanced pro charts, you have to wait for the rules to apply. Now when you go to advanced pro and you want to start removing some of these indicators, you can actually just use the order blocks and the buy signals. That will come later. You can start doing it now, but you have to feel confident that you're getting into the right place at the right time. So here's the deal. So we have to wait for break of structure in the beginning, 168.30, 168.32. Okay, everything's red. So of course what can happen, I've been talking about this trade for the last week or so in the weekly Forex forecast, which I'll do on YouTube. The price could just take out this order block. The chance of that happening are very, very low. Okay, very, very low. And so therefore you can buy here, you can buy here, you could buy here. Make sure it's way below the green zone. But trade here was on the break of structure here. Notice momentum. There's a couple of points which are really, really important to focus on. At the point of the break of structure, and you can have an order, you can have a buy stop up here easily. Just above there, 168.42 would be good. And stop below this area here, or stop just below the 50-day moving average. Doesn't matter, but make sure it stops up wide enough to allow it to breathe, if you like. So in this instance, notice here at the point of entry, the stochastic here is in neutral, and that's really important. If you buy here, you're going to have to put up a bit of pain, and you have to have a wider stop. If you buy here, that's a better entry. If you buy here, that's a worse entry. You're going to go against you for quite some time. If you buy up here, you get the picture. The price has to reset itself every now and again. Now, if we took this price out here at 1700, a nice round number, so therefore, you know, we could have got more money out of it, but you know, so what? So let me go into the 30-minute chart on the pound Canadian. There's a couple of important points here. Move my head out of the way. Remember the order block on the 4-hour? Whenever you get an order block green, in this instance, on the 30-minute and the 50-minute, don't even hesitate. Okay, you can wait for the break of structure on the 30-minute. So this is the intraday chart, and as you can see, I'm using the 50, and the 100 and the 200, so they're stacking on top of each other, which confirms that we know is going to move up because of the fact that the 4-hour chart is hitting an order block. It's going down, it's going up, it's in a green zone, There's momentum behind the price. So intraday trading, very easy. Target 1, target 2. But above the central pivot, target 1, target 2. Don't forget your positioning the trade as well. So you can combine the both is what I'm saying. And it's quite a good idea to do that, which compounds your account. Just make sure your risk is sensible. Don't go mad, because there's going to be other trades to be had as well. Let's go on to non-farm payroll now. So on to non-farm payroll and how to trade it. I started doing this 30 years ago, and what I'd done, I made a lot of money one month, and I thought, wow, I've made tens of thousands of pounds. I had 2 young kids, and I thought, well, this is it, I've done it. And of course, the next month I lost the money, and it didn't work, and I didn't get that consistency that I was looking for then. So this is what I've done, and I'd recommend that you don't do this, but this is what I've done. I've basically worked out, I would prefer to see the market, this is euro dollar by the way, I would prefer to see the markets much narrower than this, completely sideways. But nonetheless, this is the idea. So we would work out the high for the previous day and the low for today. And based upon that, if it breaks to the low side, we put a sell stop here or a buy stop up here. Now, of course, I would put 2 trades on. I would put a buy stop here and a sell stop here. So whichever one broke and made the money, I would take it out. Now, the problems. First, a couple of problems. The first one is that when non-farm payroll comes out, market volatility is enormous, and therefore the spreads within your broker become far wider than you've ever seen. And therefore, you could be talking about, instead of a 3-pip spread, you're talking about a 40 pip spread at that moment. So you have to bear that in mind. The other thing that happens, you may well have seen this in the past, is that the price shoots straight out, breaks the upper resistance line or the support line, rallies, but then it completely reverses within a couple of minutes. And of course, then you've got to make another decision then, haven't you? Do you allow it to go, or do you take, where do you put your stop? So it's very, very stressful. That's the first thing. And I'm not into stressful trading, much more relaxed with position trading. And of course, so the thing to do is when you get the break, allow it to break. Give it 10, 15 minutes and let the broker's spreads settle down so that you're going to get a reasonable spread at the point of impact. Let me show you a chart which might help you. So this is the break. Let's say this is the break of the euro. It's not, it's the pound Canadian, but it's the same technique. So all you do, once you get the break and you know the direction, you're just going to wait a pullback. Now the pullback, all you do is grab the previous low of the day and then do your Fibonacci. So let me take this off and show you what I mean. For those who don't know, you just grab your Fibonacci tool, left click at the bottom low, and then drag it up to the top of the highest high. Okay, and this gives you 0.382, 0.5 and 0.618. 0.618 is the significant number. And once you get that pullback, that's your entry. Rather than having the breakout and then it whipsawing up, whipsawing down and losing the money, which is most common, wait for the market. Be the one that actually waits for the trade to pull back. And it will pull back, believe me. This is a 5-minute chart, but it works on a 15-minute chart as well. So wait for it to pull back to 618%. Could be 50%. Just don't know. But just make sure your stop is below the previous low and then you'll be fine. Hopefully that's helpful. Great to see you, and I'll be doing the daily video analysis for members after the news at 1:30, so look out for that. And if you want to become a member, then please click on the link below and be part of my team.